Oh, and that's the thing, right on time. Click. All right, good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Why would we want to do that? Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Where's the button? I got to find the button. There we are. Anywho, good morning. My name is Wayne. I will be your guide today on this thing we call year-over-year CPI, month-over-month CPI, core CPI, and now something the Fed calls super core CPI. Yeah. So currently right now, the biggest winner in the world is the Japanese stock market. It's up 0.57%. The FTSE is up 0.54%, so the UK is rallying. Boom. The Dow is up 0.29%. So some risk on in the global stock markets. However, the biggest loser is the NASDAQ. What does that mean? Well, maybe that means interest rates are going to go up a little bit more than what was priced in a few days ago. NASDAQ was going to be hurt a lot more. S&P 500 is kind of flat. The yield on the 10-year T-note, 3.434, which is flat. Oil, 81.43, flat. So apparently the world is waiting. The world is waiting for this CPI. Also, don't forget, at 2 p.m. we have FOMC meeting minutes. Coolio. So anywho, it's going to be an interesting morning. We'll get that news. We'll parse it. We'll have to do the super core ourselves. Okay. So we will get through that, and I guess that's today's agenda. And then later in the week, we're going to be worried about bank earnings on Friday, which we've talked about this last week. So anyways, so today, right now, this morning, it's all about U.S. inflation. Cool. So if you love all of this, please click the thumbs up while you're here. Don't forget. Cool. Now, under the video in the description, you will find lots of links to resources that you might find helpful. There's a link to my book, Strategic and Tactical Forex Trading. Would you please leave a book review on Amazon.com? There's a link to Quant-in-a-Box, which is your artificial intelligence sitting on the Google Cloud. How does it work for you? Oh, well, it gathers all the macroeconomic data from private and governmental websites, crunches all the data together and does a comparative analysis of all these economies and spits out potential trading opportunities based on quantitative analysis of macroeconomics globally. Oh yeah, but the trial is less than $8. You might want to check that out. But anyways, there's a link to quantbox.co in the description. Check that out. There's a link to FX Bootcamp. It's a live Forex community, So if you want to learn swing trading and day trading and all the analysis that goes into it, that's FX Bootcamp. And also you need a trustworthy, ethical foreign exchange broker to be a service provider to you. You want fast service. You want affordable service. You want a broker that actually pays you your swap. Many brokers don't pay you your swap. You're due, but they don't pay because they figure retail Forex traders are stupid. Well, Traders Way respects retail Forex traders. So if you open up a demo account, maybe they'll earn your loyalty and respect. Tradersway.com. So all those links are in the description below. Check them out. They're resources for you. For you. So let's get this out of the way. And we are all talking about CPI. And so we will be getting the data from the Bureau of Labor Statistics. And now we're focused on something which is much different from the past, something called Supercore. Now, before we take a look at what the headline number is, we have to understand where we are. Where we are, or where are we, relative to this journey, okay? So you can see, okay, the UK is still stuck way high levels of inflation. The UK has a long ways to go, and that's quite bad. Europe is still stuck. Very high inflation. Okay, you're like, well, it's improving. But 7 is still redonkulous. New Zealand, redonkulous, 7.2. The United States, not that bad, huh? That we're going to drop from 6 to 5.2. This is what I'm looking at here. Not too shabby compared to the rest of the rest. Australia, still crazy levels. Japan, very low inflation. Swiss franc, very low inflation. Okay. In the United States, if you think about it, if these are all funding currencies, you could look at that and say, well, maybe that's where the United States should be. Okay. But the U.S. right now is expected to be at 5.2, catching up with Canada. So that kind of makes sense, doesn't it? Somewhere around 5 on our way to 4. It just shows you the divergence in inflation. Now you can go back and look at this historically. Okay, going back to World War I, the United States typically doesn't have inflation this high, huh? 1974, the U.S. had 12% inflation. Oops, what did I do? I clicked on something. Oh, no, I clicked on something. Don't click on that. What did I do? Interesting. I don't know what it's doing, but it's doing something. All right. Here. Is it only picking up U.S. now? Interesting. What did I click on? So anyways, inflation typically, it's interesting. I didn't know I could do this. Boop. But it's not a zoom in issue. That's interesting. Interesting. So you can see no matter where you are in the world, inflation is still way too high, huh? So anyways, that gives you an idea. Inflation needs to come down. And 5.2, we got to get closer to 5. So if it drops, you're like, why did it drop from 6 down to 5.2 or 5.3? Well, yeah, you'll know. All right, so anyways, let's take a look at the old CPI. And so you got everything, and then to get core, you have to strip out food and energy. Now, I thought about this. There's two things about that process. Let me go back up. Now, I've always been told that the Fed strips out food and energy. Okay, they strip out food and they strip out energy to get core because they're volatile. I never quite understood that. I'm like, well, if there's high volatility in inflation, isn't that worrisome? Why would you strip it out? You're like, oh, the United States doesn't have inflation. Oh, but gasoline's $5 a gallon, right? Like, how do you say that? Oh, there's no inflation in the United States. Yeah, but you spend $15 per person at Taco Bell now? You're kidding me, right? So, but Jim's smart. Jim's on it. Well, it's not agenda. Let's carry that a little bit further. Jim says it doesn't fit their agenda. Actually, take that thought a little further. It's not agenda. You're close, though, Jim. And it's just you might have known this for decades. This has just occurred to me now. But it has to do with our crisis, if you want to call it that. Why does the Fed strip it out? It's not agenda. It's so close. You almost have it. Well, here's what occurred to me. Newsflash. Shields up. Red alert. Right? It just finally hit me. After 20-something years. The Fed can't impact food prices or energy prices. The Fed can raise interest rates or lower interest rates. It ain't going to produce more oil. The Fed could raise interest rates or lower interest rates, but they can't plant more corn. No matter what they do, they can't have a direct impact on it. Right? Hey, Lucas, why'd you plant sorghum? The Fed made me. Yeah. So that's, I don't know why it took so long, right? Why did it? So anyways, that's my conclusion now. Maybe I'm wrong, but that's how I look at it now. I'm like, oh yeah. Okay. So anywho, so we'll strip that out. And now there's something called Supercore, because now the Fed is also trying to take out, they're trying to separate inflation from shelter. Okay. And then inflation from services. I don't know, less energy services, but like medical services. I don't know about transportation, but services anyways. I wonder if we have a definition now, because it's super core inflation. Do we have an official? Super core inflation zooms on the prices of services which have been persistently high. Fed chairman touched on the measure to assess better the persistency of high inflation he's targeting. But it doesn't give you the proper definition. Well, that's the only one we got. So let's Fed's newest definition. We'll do Business Insider. So this is even just from 2 weeks ago, a month ago. Supercore inflation, the consumer price index, the measure of average price change in basket, still not giving us. So we got to strip out, I know the housing is the big one, and I was just wondering the specific type of services. Inflation of basket of goods and services minus food and energy, which we just did, minus the housing inflation. So that's all it is. So going back to here, you got to strip out food, energy, and shelter to get Supercore. Okay? Now, yeah, so many, I don't know why they do that, because it always discourages me from returning to the site, which means they're going to have less advertising. Right? So they should stop being whores. All right. Where's my drawing tool, Epic? So It's interesting. This particular CPI is important because we're trying to figure out whether the summary of economic projections need to change or not. So, many are going to look at year over year. Fed doesn't actually look at year over year. In fact, they don't even use CPI. They use PCE. But let's just go with the narrative. So today's year over year is important. Today's month over month is important. Okay. Then there's core. And then there's super core. Okay. So core, which is headline minus food minus energy. And this is core minus shelter. So it gets down to like there's almost nothing left, but out of all of that, is there still inflation? Okay. Oh, Jimmy. Jimmy says, thanks for sharing your insights. Awesome. Hey, my pleasure. Thanks for being in my life. Okay. So anyways, in 10 and a half minutes, we'll get the new data, and we'll have to look at all of that. The important here is how the market interprets the data. Now, here's the danger today. This is the danger today. You ready? So you're trading and the Fed is data dependent, right? The Fed's going to lower interest rates, raise interest rates, or keep things paused now or in the near future because of which number? Remember, I would guess what, half the market doesn't even know supercore? It's a new term. Half the market doesn't even know the term. They're like they didn't watch the last Fed meeting. They didn't watch the press conference. They didn't hear Jay Powell talk about supercore. Okay? Yeah, but it's PCE, but still, what I'm asking is they're data dependent. Well, what data? So let's say not just PCE. They're going to look at the same thing from PCE, but it's about the same anyways. Are they going to look at year over year headline? Are they going to look at month on month headline? Are they going to look at core year over year? Are they going to look at core month over month? Are they going to look at super core? Which one are they using to make a decision? Which one are the other market participants today going to look at to make a decision today? And the danger is we get a scatter plot of opinions. Which one are you using? Oh my God, it came out 5.4. Sell. 5.4 headline, but someone else might say, oh my God, well, the rate of change in inflation is slowing down month over month. And then someone else is looking at core and someone else is looking at super core. And oh my God, we could have, let's say, we could have multiple opinions and multiple decisions. First of all, we might disagree with each other. Someone might say inflation high bad, but someone else might say, well, that leads to good. And someone else might say CPI good, but that could lead to a bad consequence because of behavioral finance. It forces the Fed to do the other thing. But so we could totally disagree on what to do with the data, but I don't even know if market participants are using the same data. Do you see the car wreck that could happen? Not only could we disagree with each other, but we could be interpreting the wrong data or different data, let's just say. It's very possible today that I say inflation's come down and you say inflation goes up. We show the evidence and we're both right. So how are we going to trade it? So yeah, danger, danger, danger. Huh? Danger, danger, danger. Cool. What a great website, huh? Takes you over CPI, NFP. Then we have CPI right here. And we have the unemployment rate right here. Average hourly earnings, producer price index, it's all here. Employment costs are still going up. Productivity is going up even more, which is great. Import, export prices. Such a beautiful, huh? Such a beautiful website. Why would you say something like that, Grumpy? And by the way, if I say short dollar, that means long gold. Mark says, yeah, it can make wide trading range opportunities rather than trends. Yes. The point is you're thinking about it before it happens, not after it happens, right? So you can see there's a lot of food. Okay. Now, once again, I was in Europe recently, and I thought things were quite affordable, actually. And I think perhaps there's less tourism this year because of energy costs earlier in the year. People didn't want to go to Venice. But I had wonderful cuttlefish. Huh? A cuttlefish. Yeah, wonderful cuttlefish. Wasn't very expensive. Had nice squid in Venice. The squid in Venice to die for. Wasn't very expensive. I was really surprised. Now, of course, you could go ape crazy expensive if you want to, but traveling with wife and kids, kids don't want fancy restaurants, so you gotta sometimes go, go affordable, and then every once in a while you want to go nicer, and just everything seemed to be affordable. And the housing, so every city we went to, we rented apartments, cheap. Cheap. It was cheap. Really. I'm cheap. I was very, very surprised by that. So now I'm looking at inflation, and look at this. This food, right? Food is outrageous. So we get out there. For example, in Florence, I had the bistecca alla Florentina. I had the Florence style steak, right? It's a special steak you get in Florence. And you order it per ounce. Yes, I did. That's funny, Thiago. You're asking. I don't know. I didn't read it, but So anyway, so I go there. And it's a special steak from it's cooked in a special way. It's from a special cow, all this kind of stuff. Great. So you order it by the ounce. And the waiter came out and he apologized to the table. And he's like, we only have this ginormous steak. It's huge. You have to order basically a half a cow. It's going to be outrageously expensive. And I'm like, yeah, bring it on. Bring it on. But literally, imagine the steak is so big, the waiter apologizes. You know what it cost me? 55 euros. That's a boring, average, crappy steak in New York City. I mean, 55 bucks. New York City, you could... A friend of mine in Dubai, he had a business dinner. They went to a fancy restaurant in Dubai. They ordered Kobe tomahawks. And they spent, for the two of them, they spent $5,000 on dinner. So when the waiter apologized because it's 55 euros, you're like, that's the most you could possibly spend on food? That's the biggest bill you could have? You're like, it's amazing. Most of the time, we're only spending 15 to 20 euros, including wine, like crazy. Bistec Florentina. Yeah, so it was great. Okay, so anyways, so this is where the inflation is. And then we're trying to strip this out. We want this to go down. Now, energy is obviously down from where it was before. Okay. Okay. Yep. All right. So who's going to post the numbers? Boop, boop, boop. But it's very interesting to see different types of inflation around the world, huh? Where I was very, very, very surprised how affordable Italy was. It was... Okay, here we go. Here it is. So it still rose, so it's not declining, but it's rising at a slower rate than before. And dropped to 5%, huh? You see that? 5.0? Not 5.2, 5.0. So let's move over and see the dollar. The dollar. And it's, let's go to a smaller time frame. Yeah. No, this should be good. This should be good, I would suspect. So this is the outcome that has been planned. Trucking mogul, I already covered that in my quarterly outlook. Okay. Oops. How do I get back? How do I get bonk? Well. So this could be interpreted by many as the Fed doesn't need to do as much as they've been doing, that it's starting to work. Cool. I want to kind of look at a little bit of everything now. Okay, gold is way up, as predicted. You're welcome. Okay, S&P 500 up, as predicted. You're welcome. Bitcoin up, as predicted. You're welcome. By the way, if I haven't predicted any of this stuff, then call bullshit. But I'm pretty sure I've spent days and days, even over the last couple of weeks, outlining this stuff. Based on facts, not opinion. Okay, you're welcome. Okay, now, when you look at this, you might say, Wayne, you're wrong. So let me open this up. This says down and it's going up. You weren't there for the conversation. There's certain circumstances for this to go down. Those circumstances have not been met. But in those circumstances, this is supposed to go up. Okay? And yeah, once again, it's already been done for you. Okay? Richard says pound down. Let's take a look at that. Let's go back to the shorter term move here. Okay. So what's wrong with the pound? Well, I already showed that to you, but let's go back. Here. The UK okay, 10.42%. The UK is by far the worst. Things are improving radically in the United States, but things in the UK suck. And pound should be, rightfully so, punished. It's only facts. And the United States now has less than half the inflation. So the US is now right here. And the UK is up here. It's abominable. But it's okay because Grandpa Joe Biden's meeting with the Prime Minister of the UK. He's going to fix everything for Great Britain's. Richard says, all predicted, Master Wayne. Thank you, Richard. Cool. How nice is that? Can I get a whoop whoop? Oh, that coffee's so good. Cool. That's great. So there is going to be a massive repricing. So we can look at this trend. I've already done CPI, but we can do PCE. Okay, and this is where we are. By the way, how many other YouTube gurus pull up the Fed database and actually draw their own research? Is it many? So the trend is currently up, right? Is that right, Joe Moo? By the way, Johnny, I've been thinking about it quite a bit lately. We need to plan another get-together in New York, huh? I kind of feel like cigars and a cocktail. Yep. And I think I owe you a cocktail. So It makes it even a higher priority. Just out of curiosity, how many people would want to do a meetup sometime this summer where we just meet up at the Harvard Club, have some appetizers, and then zip over to one of the cigar places and listen to jazz and have cigars and have a good old convo? Jim, you'd go out to New York for that? Johnny's like, August? Yeah, that sounds about right. Like, let's say if I were to say August, immediately I would say the second week of August, because the third week of August is go time. So it'd be interesting to do the second week of just like, okay, summer's over, bitches. Summer's over. Back to work. Yeah, right on. Yeah, yeah, taking a train to New York City can't be that big of a deal, eh, Denise? Yeah. Oh, we have such a good time when we do our get-togethers. So August, can you imagine? The sun is setting on the skyscrapers of New York City, and we're on the rooftop deck of the Harvard Club in Midtown Manhattan. The energy, one of the things I love about New York City is the summer energy. Like, you can literally feel the city vibrating on a warm summer night. Yeah, it's so wonderful. Yeah. So a lot of people, oh, good. Oh, is that right? Yeah, New York's not the same anymore. Yeah, I could buy in that, but how about this? Let me change the story. When I was a young man, I was raising money for my startup. I was meeting with venture capitalists in New York City, and I was doing a press tour. So imagine this is what I was doing in my 20s. Amazing, right? Just amazing. I'm so proud of that young man. So I was in New York City, and I spent the entire day going from meeting to meeting to meeting. I interviewed with Yahoo Internet Life magazine. I interviewed with CNN. I even did an interview with Dub magazine. Like, you can't make that crap up. He just talked to Snoop Dogg, and now he's talking to me. And you ask, like, why would I talk to the CEO or the one of the publishers of Dub magazine? And for me, I'm like, I'll talk to anybody because it's good practice. It had nothing to do with my startup. I wasn't doing, here's Dub magazine. I wasn't doing hip hop startup, right? But anyway, so you can't make this stuff up, right? Who else did I meet with that day? I guess when you meet with CNN, that's enough, right? So I have all these crazy memories of that day. It was so long ago. I mean, it was such a stressful day. I'm not even joking. I was walking from one meeting to the other, and I had walked so much that I had to go into a store, buy new socks, take my socks off, throw the old socks into the trash can, put new socks on. Like, it's one of those days, right? But at the end of the day, the sun was just setting. Like, it had even almost gone down, but there was still light in the sky. But, you know, it was just in that transition. Dark hadn't got there yet. And it was so warm, and everyone had come out of their tiny little apartments onto the streets and into the cafes and restaurants and bars. And it was one of the most beautiful days in history. You could literally feel the electricity in the air from the people. Yeah. Just wonderful. After one of the biggest days ever, one of the most beautiful days ever. So, yeah. Yeah, Trucking Moguls' Dub magazine used to be one of my favorites. But imagine I actually did that. I sat down, I talked to, I can't remember who it was, but one of the writers, somebody anyway. So Okay? But can you imagine how you feel where you're sitting down waiting to be interviewed by CNN? Yeah. That's a big day for, somebody 22 or 23. Anyways, going back, let's take a look at how all of this is taking forward. Now, you remember, I'm not a scalper. So you're like, Wayne, how come you're not on this? How come you're not going go buy? So. The reason for all this, guys, is I've already talked about every single one of these trades yesterday and the day before. Do you understand? I'm not on a 5-minute chart going, go, 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 react. Okay? Think about it. 2.5, almost 3 weeks ago, I did a quarterly outlook that talked about all of this. Yesterday's day trading group, we talked about this. The day before's day trading group, we talked about this. We talked about this on Sunday night. Plan A and Plan B and the big day and when will the volatility come back and this is our high and this is a higher low. Here are the fundamentals. Here's the divergence in central banking policy. Here's the seasonality. Like, the fact the CPI came out the way it came out, to me, is sort of irrelevant. All you're trading now, if you're just in the game now, you're trading the volatility. And I want you to understand that that's what you're doing. Not to say that you're doing something bad, but to say that you're doing something different from a professional investor. Okay? Okay, professional traders avoid volatility. I want you to understand that. And the longer or the more you seek volatility, the longer you're going to remain an amateur. And I don't mean anything bad about being an amateur, but you're not trading the way a professional would trade. In fact, you're trading in the opposite way. So anyways, what is this? About a 50%. This is about a 382. This is about a 618. Okay. How do I see gold now? Well, nothing has changed in my point of view since the Fed released the summary of economic projections. How many people can confirm that on the day the Fed released the summary of economic projections, I changed my projection for gold? How many people can confirm that? Not based on guessing, not based on opinion, not based on conjecture, but simply on quantitative analysis of the facts. My opinion is irrelevant. That's why I don't like it when people say, well, how do you see this? Or what do you think about that? I like to be facetious. I'm like, I don't think. What do you mean think? I don't think, but I know. I know what the facts are, but what do I think about them? Well, I joke because it's not really, I mean, thinking is reserved for other parts of trading, but like when we look at things like let's do this. What do I think about this? I don't think about this. All I know is the UK has ridiculous levels of inflation compared to everybody else. So if you were going to score the UK, you would say, hey, Brits, you suck. And in fact, inflation is falling everywhere. Falling, stable, falling. Okay? But it's going up in the UK. It's going up in Australia. Well, guess which currencies are the weakest right now? I don't mean today. I mean in general. Maybe today, but certainly yesterday, the day before, and probably tomorrow. Which ones are the worst ones? Well, we can say inflation is going up. What do I think about that? I don't think about that. That's just fact. You don't think about that? Okay, it's just fact. Okay, so is that good or bad? Probably bad. Inflation is going up in this country. Do I care which country? Not really. Okay. Oh, it's Australia. Great. Inflation's actually going up. Sell it. And then we'll take a look at another one. Inflation's not going up here, but it's not going down. Okay, sell that. They're losing the game. They're falling behind. There's either no progress or they're losing ground. Okay? So you look at it, right? There's two here. You see them? And there's one here. Okay? Those are the ones you sell. Good to know, right? But what do I think about them? I don't live in the UK. I don't think about it at all. What do I think about the Great British Pound? What do I think about UK and the inflation in the UK? Well, I'm not traveling to the UK. I don't live in the UK. I don't really care. But if I was a currency trader, I'd say, well, that's not good. They're losing. I'm going to sell it. Grumpy's like, hey, I guess it's a good psychology. It very much is a psychology. It very much is. Yes. It's just, yeah, it just is the facts. It's just the facts, ma'am. Oops, I just killed that. Did I kill it? Kill it? Let's see. I did kill it. Kill it. No, I didn't kill it. Kill it. So anyways, on the day, the summary of economic projections was released. I explained, if you attended my special coverage, I explained in the minute it was released, the most important information inside that data, and then I explained exactly what it meant for the value of gold and why. Okay. Okay. So I said, see that? Gold is going to go up. Okay. And that was on this day. I guess I'll have to do it this way. Delete. On this day right here. Okay. See that? Can anybody confirm that? On that day, in that moment, I opened the report, I looked at the dot plots, and then I said gold goes up. Okay, I'm not interested in the right and the wrong. I'm interested in the factual basis of strategic planning. The factual basis of strategic planning. You can misinterpret what I'm saying as arrogance. That's not the point. I have ego, but I'm not egotistical. And we talked about this, what that means actually last night in the day trading group, but I am super, super, super ridiculously confident because I've done the work. I can tell you the work I'm doing. I can go back and reshare the work I already shared to make sure that it all puts together, right? But I explained it then, and I can explain it, and I explained it yesterday, I can explain it now. The point is I'm trying to thread these things to like, how do I get there? How can I be confident? I didn't mean arrogant. Arrogant is where I have no factual foundation for my confidence. Now, the other part of being a trader is you have this supreme confidence, which is ego. And your ego is based on hardcore research and thought and analysis. But we have weak convictions as traders. Weak convictions. Which means you are 100% sure of what you believe strategically or fundamentally, okay? Whatever you want to call it, strategically or fundamentally, you're 110% absolutely certain of what you expect the market to do and why. But if technically it breaks down, you're out. So if gold had crashed today, that's because CPI went up, which means that what I had not projected that, and I would be immediately wrong, and I'd be immediately not buying gold. You see? And I'd step back and go, oh, snap! How the hell did that happen? And right? An arrogant, egotistical trader would buy the dip. Why would they buy a dip if gold crashed? Well, because they know it's going to go up. And that's the big difference between being egotistical and having an ego. The ego is supreme confidence with a base, and the other one is supreme confidence baseless. And you'd be buying a dip because it's falling, but you know it's going to go up. And that's where bankruptcy lives, huh? So I'll end up talking about that in my next book. Not the book I'm theoretically writing right now, but the book I'm going to theoretically write after the book I am theoretically writing. Okay, so think about that. I think we can all agree that you must have confidence to succeed as a trader. But if you have baseless confidence, even if you do find success, you are going to self-sabotage because you don't believe your own success, because you know you have a baseless confidence. You just know you're going to be good at this. Uh-huh. Uh-huh. Cool. So anyways, we got a lot to work out over the next several weeks. This doesn't have to go up today. That's my point. If your only participation is getting in now that it's moved, you're terribly, terribly, terribly late. So like in the swing trading group last week, we talked about it going up. On Sunday in the day trading group, we talked about it going up. On Monday in the day trading group, we talked about it going up. On Tuesday in the day trading group, we talked about it going up. Last night's day trading group, we talked about it going up. And now it's up, and now you're in it? What? Now? Now. So if you thought it was going to go up here, okay, and then it made a higher high here. So this is what we talked about last night in the day trading group, huh? then the very least, somewhere in here should be your up. But not now that it's happened. So now what's going to happen? What's going to happen next? Volatility, bro. You're trading the vol. You're trading with the widest spreads, the highest risk of slippage, at the worst price, after the fact. So if anything, you're going to be the one that they take out first. And then we resume. That's possible, but that's what volatility would look like. It could show that. Maybe it goes up like this. Maybe. But the thing is, it never pays to get in late. Okay? So imagine more like if you attended my a quarterly outlook I did in March. So I did the outlook way over here somewhere. And I had already explained, based on March 22nd, bullishness on gold and the rationale for it. What if you were in today's trade way down in here? Or after the higher high, higher low, you were in here. Okay? Or you entered on the roll reversal here. Like, that's how I'm trying to teach you to trade. To avoid high volatility like a professional would, and instead focus your energy on strategy, not tactics. Scalping is pure tactics. A high volatility event-driven strategy like scalping the news is just tactics. I have no problems with that. I hope everyone becomes fantastic at scalping and trading the news. I think it's important as part of your career. But it's only one small part. I want you to spend most of your time being focused on strategy, which is this. That's all it is, you see? Now, you don't see it probably because you're stuck on a 15-minute chart. Maybe every once in a while you look at an hourly chart. But most of the time you're a 15-minute or 5 and you're scup, which is fine, but you can never compound because you're buy, out, sell, out, buy. And you're getting bone, but very little meat. Okay, you're getting the scraps. Okay? You're getting the scraps. Mostly bone. There's a little bit of meat, a little bit of gristle. Okay? But look how simple that pattern is. Why not trade that pattern? And most people will miss this pattern because they don't know it's coming or why it's coming. And I spend most of my time trying to teach you guys that. And I honestly believe if you look at that dot plot on March 22nd at 2 in the afternoon, we got this and I said that. Okay, that's it. Now you're like, but okay, the thing is, it took 3 weeks to happen. But on March 22nd, we were at 1900. Okay, and now we should be, right? You would think this would go to 2100. And then check this out. How important is it? We are about to make the all-time high in gold. Now, maybe we touch it and collapse. Well, that's technical, and that could happen. But what's the fundamental? Well, in the swing trading group last week, by the way, it looks like we just hit the all-time high. Is that right? No. Hang on. Let me do that again. No, that's the smaller one. Okay, yeah, we're way up there. Almost 2100. Yeah, we're pretty close. One of the things I talked about in the swing trading group is gold going to $20,000 an ounce. So when I say up, I've definitely talked about up. Okay, so anyways, Grumpy Cat's better at playing jazz piano. Oh, wow. What a great skill. Yeah. My favorite jazz pianist would be Chick Corea. All right. Yeah, let's take a look. Peso benefiting. Even the Rand. Remember, the Rand was doing pretty well yesterday. So anyways, for those that are sort of newer, I want you to understand that I'm trying to have you focus more on why things are happening, not just what is happening. If you say what is happening in the markets, what you're describing is the here and now and the recent past. I want you to spend more time on your daily chart. And I want you to spend more time asking yourself, why would gold go up? Why would gold go down? Why would dollar go up? Why would dollar go down? That's my challenge to you. Now, getting an update. Today's biggest winner now is gold, up 1%. Yeah. Yep. Oil, look at that, above 82. So in yesterday's day trading group, I showed research indicating the expected average price of oil in the United States for the year between now and the end of the year, and it was just updated. Might have been just updated yesterday. So looking at this number, it's interesting. Hans and Gold, winner, chicken dinner. Hot? Going to Sizzler tonight, as Wesley Snipes would say. Going to Sizzler. I'm going to Sizzler. DAX way up. Oh, boy. Yeah, good. Good. I hope Credit Suisse doubles from 80 cents to 100 to $1.60. Oh my God, don't even. Okay. Yeah, FTSE doing its thing. Okay. See, I have it projected out to 42.60, 42.59. Lovely, right? With your smile so worn And your teeth so green. Yep. Anywho. Where's my DAX? Okay. Okay. So we did DAX. Was it yesterday or something? Yep. I think it was yesterday. Yesterday. Up, down to the 21. Up. Check that out. Yeah, boy. That's what's supposed to happen. That's what's supposed to happen, bro. Yeah, cool, man. Lots of profit taking. Here's a little price action for you. Okay. Oh, let's do this in a different color. I guess let's do white. I don't do enough of that. Okay. Up, 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 down, down. Up, 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 down, down. All right. Up, 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 down, down. Okay, look at this. So if I mark this in a different color, this shows continuation. This shows continuation. This shows continuation. Okay. See, look at the green off of the role reversal is what it's trying to indicate, right? Yeah, it is, Blue Boy. So at FX Bootcamp, one of the courses that you take is the price action course. I think at the opening of my seminar when I was in South Africa, I stood in front of a group, I think about 300 people. And I said, the secret to Forex and trading is this. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, up, down, down, up, down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell. All right, so we have a question about nat gas. We can do nat gas, sure. Cool. Let's do nat gas. Okay. What do we know about nat gas? We have 6% more natural gas in storage than the 5-year average. Okay. Why do I know this? Yesterday, I read the short-term energy outlook. And I reviewed inventory level of nat gas relative to the 5-year average. So I know this. Lesso says that you must come back to South Africa. I would love to. I'd love to do Cape Town this time. If I can find the time, in fact, I'm willing to go almost anywhere in the world. So here's a message in a bottle for everybody. If you can round up enough people so that I can cover my costs of coming to visit, It'd be great if you could put a couple of bucks in my pocket for the time. But the most important thing is we got to cover the costs. I'm pretty much willing to go anywhere in the world. So you're like, whether it's 30 people or 300 people, okay, comes down the cost. Okay, so so this means because we have 6% more in storage than the 5-year average, okay, then the question is, does that mean it's likely to fall further? Well, doesn't that explain why it fell? We've already put it in storage. Price fell because the world freaked out. Okay, remember the freak out? Remember all of that? Because Germans were going to freeze to death. So the world produced lots of natural gas to try to help the Germans out. Okay. Tasmania? Well, I travel on an Australian passport, so I don't think that would be a problem, Grumpy Cat. Okay. So anyways, so to help our German friends out, the Americans decided to produce a whole bunch of nat gas. This is American natural gas. Remember, natural gas is not a global market. Then So production went up. So production. Okay, oops. Okay, it went up. Okay, you have to go with that. That means production, whatever that symbolism is. Okay, production went up. Then what did we have? Issue number 2. We had, where'd my drawing tool go? There we go. Then we had a fire at Freeport. Which means we were producing all this oil, natural gas. But then there was a fire at Freeport, which means exports dropped by 20%. So what do you think happened to all that 20% that was not being exported? Well, you had to store it. Okay, so now you get to the point where, oh, there's too much natural gas. Okay, so does having 6% more mean it's going to fall further? No, that's already happened. We're more interested in the future. What's the number one usage of nat gas? Heating. When does that demand show up? Not July in the United States anyways. So that might have to be deferred. Okay? Or production needs to fall. Do you track production? I do. So, supply has to fall or demand has to go up. So production could fall. So you got to watch those numbers. Or demand, okay, demand could fall. But in this case, if you want prices to go up, demand would have to increase. And according to this, check this out. My day trading group knows what this is, but watch this. According to this, Okay? If you don't know what that acronym is, you should be in the day trading group because I used this information yesterday. And in that, you could track inventory levels, historical levels, production levels, and even demand, and then even projections for price. And they say no higher than 3, which I think an average of 265, if I remember correctly. Okay. And we are, we're only at, let's drop into a smaller time frame. We're only at just above 2. Okay. Now, some of us in the swing trading group bought it, what was it, $1.90? I thought it was even lower than that. Was it? How long ago was that? Do you guys remember? It was like double bottomed on the lowest low, the lowest historic low. Was it back here in end of March, I guess? I thought it was lower than 190. I thought Johnny was on it and a couple of other people. Yeah. That's right, Bumpy. A big part of it was winter wasn't cold in Europe. And so that means demand down, supply up, prices down. Yeah. But once again, that's old data. Nobody's interested in that anymore. So it's like, I don't know. It's sort of like Joe Biden going to Ireland and quoting Irish poets. And someone's like, dude, why are you even here? What's the freaking point? What do you want from us? Right? It's like, it's useless information now that there was a mild winter and all this. Like, we already know all of this. This is why it fell. So now you got to think about the next 3, 6, and 12 months. If you're going to trade nat gas, you got to think 3, 6, and 12 months. Cool. And show me the facts. So when I say the EIASTEO, and you're looking at this type of data, and you're looking at charts and spreadsheets and trying to predict future demand, and you're looking at seasonality and all that kind of stuff, you're thinking 3, 6, and 12 months in advance. Who cares? It was a warm winter, the warmest winter in history in Europe. Yeah, well, bro, it's spring. Nobody cares anymore. That's already played out. What's going to happen next? And that's where we make our money, right? 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 So remember, that's not a kick in the butt. That's a slap on the ass. It's just more like, goop, get over there. Okay? Get over there. So I don't mean anything negative. Sometimes I have a tone which I'm trying to appeal to emotion. Sometimes I'll use a tone that will appeal to like a group hug. Sometimes I'll use a tone like maybe we're best friends. Sometimes I'll use a tone like I'm your parent. Sometimes I'll use a tone like I'm your boss. And sometimes I'll use a tone like I'm your enemy, like I'm insulting you. Why would I do all of that? Because logically and intellectually, you already know everything I'm talking about. So now I have to talk to your emotional psychology. And the only way I can talk to your emotional psychology is evoking emotions. And we all have lots of emotions. You probably have more emotions than I do because I'm a cold-hearted snake. But I need to talk to different parts of your psychology because you know that that's the biggest part of trading, isn't it? We know emotions are the hardest part of trading, not the intellect. Very few people said, well, I tried to be a Forex trader, but I'm too stupid. Very few. Fear and greed. Well, I think that even, and FOMO for sure. I think FOMO is one of the last ones. Fear and greed, I don't know. To me, I think the biggest transition, right? The biggest transition, I think, is really more of a technique thing of how do you get someone that has been trading short-term tactical, what I call retail trading strategies, and get them to trade more like an institutional professional investor. And it's damn near impossible. I think that's the biggest transition. The biggest challenge is that transition. It's really difficult. It's really, really, really difficult. Okay. So anyways, every so often I have to appeal to different parts of your psychology, and that's why I tried that. I talk a lot about that type of stuff in my book, by the way. Hint, hint, wink, wink, nudge, nudge. It's called Neuro-Linguistic Programming. Yeah, I'm getting there, Bumpy. I kind of started. I've started to start. The thing is, I really like writing. It's one of the things I really enjoyed about going back to school was writing. Because to me, it's like a puzzle. It's the way I write. I would storyboard things first. Even if I was going to write a murder mystery, I would, what the young kids now call avatar. I would create an avatar for my main character, right? And then I'd break it down. What's the psychology of the character? And I'd have 3 psychological traits. And then from those traits, I would create 3 other characters representing different parts of that first prime character's psychological profile. And then I'm like, what's the twist? And what is the twist? And then what are the side characters? And all of a sudden, I'd create all these profiles, and then, and then I would do this and do that. And I'd have all the logic. Okay, now we need a secondary theme. We need, we maybe even need a tertiary character. And all this kind of stuff. And you'd put all the puzzle pieces out, and you'd have a general idea where you want to go, and you already know the twists and the turns. And then you write. And you got the bones, but now the meat is the interesting part, where you don't actually, as a writer, know where it's going to go until you've written it. And sometimes you got to go back and tweak the bones, right? And I like that. I like that about writing, where I know what my intent is and I know what my strategy is, but as you go, you start writing. And I love that. Okay, we can look at some of these things here. Still, okay, despite what the Fed just did, the seasonality is still there. Okay. This still okay. This one responded because of that weak US dollar has responded the other way. It's still not impossible for this to roll over around this point, but I don't think I'd want to do that now. So now, I think I described this last night, I think in the day trading group, where if this goes higher, then I go pause. I go pause. If it doesn't sell at the central pivot, I pause on it. I think that's, yeah. Well, once again, Richard, I don't think. So you fell into that one, as I described earlier today. I don't think. So I don't know what the new Bank of Japan board is going to do. It'd be arrogant for me to have an opinion. I don't know what they're going to do. I don't know their new policies or not new policies. So I need to research that. Okay. Okay. Yeah. I got 99 problems, but a pip ain't one. So anyways, yep. Well, Richard says, I read something like, wait till the next meeting. The BOJ is full of surprises. No, well, I wouldn't wait for the next meeting. I would lean on other strategic information. What is the central banking divergence between Japan and the rest of the world? That would be one. What's the seasonality of Japanese yen for this time of year? That'd be another one. Okay. Now, you could use pure technical analysis, which is fine, okay, which means you're in this process now, okay? And I might disagree with you, which is fine, but you can have, right? If I disagree with you, I'm not saying you're wrong or you're stupid. We just disagree. I'm a bull, you're a bear. You're a bear, I'm a bull. Whatever, it doesn't matter to me. We talk about this a lot at FX Bootcamp in the live groups. There's a psychology to the trading. It's a symbiotic relationship. It's like dancing with a partner. You can dance in such a way that you step on each other's toes, or you can like synergize and flow to the music at a higher level, almost a magical spiritual level. Yeah, cool. That's what I prefer. So if I was a bear and you were a bull, for example, on this pair, well, there's some shots that I'd probably have taken. I might have tried to sell at the M3 if I had an opportunity. Doesn't look like I did, but I might have tried. And it worked for a day or two, but then failed. Okay, so now I'm not in that. Now it's made another higher high. Well, I don't sell that. Then it makes another higher high. Well, I don't sell that. Meanwhile, you're making money. Well, what do I care? You might be my neighbor. You're like, oh, look at him. He's making money today. What does that have to do with me? I don't care if you make money. In fact, I'm happy if you make money. I don't care. It has nothing to do with me. I got to make money. You're a bull. I'm a bear. So maybe I get one trade here. I don't really see any other trades on this chart for a bear. So you're making money today. Well, good for you. I don't really understand why you're a bull, but you're a bull. Good, sweet. Now, we get to this point and up around here. See, I'm in control. I'm in boss mode. When I say I don't want to sell, I've made a decision. Why wouldn't you sell this? Because I'm the boss. I don't want to sell it at that price. I'm not interested in selling until we get somewhere between 68 and 70. And if we get up to this window here, yeah, I'm interested. When would you be interested? See, this is just price. I know what price I'm interested in selling. So let's just say 169. Okay, great. When do I sell? When I get a reversal pattern. What reversal pattern? Well, I could do like a double top. Okay. Like this. Or I can do a 1, 2, 3, double top, lower low, lower high, and then I sell. Cool. So when am I going to see that? How the heck would I know? But that's my job. So first, I got to let it go up to the price in which I would consider even selling this. So unless we get close to 170, I'm not really interested. You can have it. You can have it. It's yours. I'm not interested. What you do is you. I don't care. So if we get to 170, and then when it does one of these things, boom, I take it down. I take it down. Take it down. I take it down. Huh? I take it down. Why? Because that's how the Wayne do. You see? And if you're a bull and you don't react to this price, I'm probably going to force you out of your trade. Okay? I'm going to hunt your stops, and I'm going to force you to make a decision. If you didn't have the strength and fortitude to take profit when you were supposed to, then I will take you out for you. I will help you make the decision. And all the bulls go away, all the bears enter, and now it's our turn. And if you're smart, you might consider buying down here or counter trending down here. But other than that, you're getting out of the way for bears to make money. But you don't really care. Who cares? You already made yours. Okay? Okay? Keep your Lambo in the garage. Maybe go out. Wax your Lambo. You got nothing better to do. And I'll be doing my job. You see the difference in attitude, the difference in psychology? I hope you love it. Click the thumbs up button if that's true. You're like, you enjoyed today's speech. Remember at 2 p.m., the release of the meeting minutes will be very important. You might want to read that. But today was the fulfillment of something I talked about 3 weeks ago in my quarterly outlook. Shouldn't be too much of a surprise. So the one thing that you did learn today, because all that was already outlined, so you already knew all that. So today we simply talked about, let's do this in black. Simply, we talked about CPI year over year, CPI month over month, CPI core, and CPI super core. Okay? And I think maybe amateurs looked at this. Some amateurs looked at this. Few amateurs looked at this. And almost nobody even understands the new concept of supercore. But you do. You do. And I hope you appreciate discussing that intellectually as well as emotionally. And I gave you the real data, and I ran the trend in headline CPI using the Fed's live database. What a day. Thank you for being beautiful and intelligent and inquisitive and funny. I appreciate you in my life. I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Have a great day. Cheers.